Welcome back. I hope you found our video helpful. Now we hope to answer any question that you may still have on getting authorised. Thank you to everyone who has sent in a question. We may not be able to get through all of them, but we are going to try to cover the main themes and subjects that many of you have raised. At the end of the webinar, do look out for our email, which will point you in the direction of further help. Our website has a lot of advice and information on it. Now, I'd also like to introduce you to members of the team with me today. Gary Hunter and John Battram are both from the authorisation team working on consumer credit. So let's get started. In terms of, you heard on the video the phrase application periods. If you're watching this, then it is likely that you'll be invited to apply for the first 2 application periods starting on the 1st of October. In this case, it is likely that you will have debt adjusting or credit brokerage within your permission set. Before we get started on the main set of questions, it's just also really important to re-emphasise, if you miss an application period, then the FCA has no discretion to reinstate your firm to its interim permission. As you heard on the video, there's lots of questions around limited and full permissions. It's an important part of our regime is the distinction between higher and lower risk activities. How you are authorised and supervised differs depending on whether you are a full or a limited permission firm. Gary and John are going to go through debt adjusting and credit broking and give you some real life examples of what might constitute a full and limited permission firm to hopefully bring this to life for you.
Thank you, Hilary. So in the credit broking space, a typical application that would be eligible for limited permission are retailers where brokerage is very much secondary to their main business, which is providing goods and non-financial services. So let's take, for example, a white goods retailer who is merely referring customers to third-party lenders for the purposes of financing their purchase of domestic appliances. In the full permission space, this is in relation to broking, this is essentially firms where broking is the main activity of the firm, where customers are coming to the broker to source a particular loan for any purpose. And also for firms that are already authorised by us for financial service activities, if these firms are adding credit brokerage, that would be a full permission.
And for debt adjusting, an example of a limited permission firm would be a motor trader who was providing part exchange. If they had credit broking as a secondary activity, because they were providing part exchange, they would also need debt adjusting and to make themselves a limited permission firm. An example of a full permission firm would be perhaps debt management, where they would have both debt counselling and debt adjusting.
Okay, that's really helpful. I've just been informed that we've got over 1,000 people watching today, so it's really encouraging to see you all really taking an interest in the application process. Also on the video you heard that there will be a guide sent out to each individual firm, which will also be on the website, which has a decision tree in it that helps you to determine, based on the activities that your firm conducts, whether you are a full or limited permission firm. So let's start with the questions. So the first question we have is from Simon, and he's unsure whether his firm should be limited or full permission. His firm is a small independent car dealer which organises finance for customers. John, would you like to take us through that?
Yeah, sure. Okay, Simon. So from what you've told us about what you do, it sounds very much like limited permission would be the correct permission level to apply for, on the basis that if you're selling cars as your main activity, and the broking is very much secondary to that, as I explained just a moment ago, and that you're referring your customers to a third-party finance provider. One thing you also might to consider is if you're entering into discussions with your customers about part exchange. So if people are coming to you to buy a new car and they've already got a car that's on finance, if you're entering into discussions about settling that finance on the first vehicle, then you may require permission for debt adjusting and or debt counselling, but both of those would be available to you as a limited permission in the context of your business.
Okay, that's really helpful. Peter has also contacted us because his firm's lease partners are saying that they need full permission, but their lawyers say they need limited permission, and the company sells electrical equipment. So slight variation there. Gary, would you like to comment on that situation?
Yes, of course. For Peter's situation, I think the first thing to say is that it's up to Peter to decide which type of application he makes. It's Peter's responsibility to apply to ourselves at the FCA for authorisation. In terms of the types of permission he could apply for, it'd either be limited permission or full permission, and that will depend upon the nature of the credit-related activities that he's providing. So, for example, if he was providing loans from his own resources, if he was providing the loans to allow his customers to buy the electrical goods, then he would need full permission. If, however, he was simply introducing his customers to finance firms, then that would be credit broking, and he would require a limited permission.
Okay, thank you. Another question here from James. James's company sells motorbikes. He wants to know what happens if he applies for limited permission and then needs to upgrade or amend his permission to a full one. So, John, would you like to comment on that situation? Because it's something we have had quite a lot of, isn't it?
It is, yeah. So James, I mean, there's two parts to the answer, I guess. So if you're asking, can a permission be changed once you've applied and been authorised, then the answer is broadly yes, and you could apply to vary a permission. But if your question's more around if you've inadvertently applied for the wrong permission, so that you've applied for limited and that should have been a full application, then it's very likely that the case officer receiving the application, having reviewed it, would identify that there may be something, it may not be the right permission, and therefore they would contact you to discuss that, and then a decision could be made that the application type, full to limited or limited to full, could be changed accordingly if that was appropriate.
I think it just stresses to James's question the importance of really considering what your firm does and then having a look at the material on our website and spending a little bit of time to make sure that you are actually applying for the right permission first time. Okay, just moving on. So Steve, Natalie and Paul have all asked very similar questions. So they are financial advisors and give mortgage advice. And again, they have asked what category they need to apply for. So Gary, would you like to comment on that one?
Yes, of course. So for both Steve, Natalie and Paul, the type of application that they're going to make is going to depend upon the consumer credit activity they're providing. All of them are financial advisors, and therefore all of them are going to be already authorised by the FCA, by the Financial Conduct Authority. Whether or not they actually need to apply for consumer credit authorisation will very much depend upon whether they're providing a consumer credit service. They would need to look on our website to establish the type of permission they would require, and it would be, as I say, related to the consumer credit activity, if indeed they are providing a consumer credit activity.
And do we provide any guidance on our website in relation to specifically scenarios and exemptions?
Yes, there's a lot of information on the website that you'll be able to find. If you have a look, there is a list of activities relating to both limited permission and also to full permission.
Thanks. Another question now from Andrew. He has asked whether remortgaging will be considered debt advice. Gary, that probably falls to you as well.
Thanks, Hilary. Yes, that's a really good question, Andrew. For debt advice, it depends. There is a definition on our website again. It's in the perimeter guidance manual, and it describes what we mean by debt advice and what we mean by debt information or information about debt services. To answer your specific question, it will depend upon what you're doing in relation to the remortgaging. If you're providing a service to consumers which is simply to assist them to remortgage, so that would be probably credit broking if you're just introducing them to a company who can do the remortgage for them. If, however, you are offering remortgaging as a debt solution, so your consumers have debt problems and you're suggesting that by remortgaging the property would be a way of resolving their debts, then that would almost certainly be debt advice, or debt counselling would be the permission that you'd require.
Okay, thank you. We've got several questions now from people who are already regulated by the FCA, for example, for mortgage advice or for financial services advice. Many of these people have asked if they should take out a variation of permission, which we acronise to a VOP. It is certainly true that if you are an existing firm and you want to add consumer credit activities, then you will need to vary your permission or VOP. It's important to note here that if you are an existing firm, an existing FCA firm, you will automatically be a full permission firm. If you are applying for a variation of permission or a VOP, there is a different form on Connect that you will need to complete. There are some major similarities between a new firm authorisation form and a variation of permission form, but again, it's important to note that if you are an existing FCA firm, you need to fill in the variation of permission form. We've had a couple of questions about VOPs already. Jenny is a GI broker, so general insurance broker, and she is adding credit broking for premium finance. She wants to know, does she need to apply for a variation of permission or a new firm authorisation? I think I've maybe covered that, but John, would you just like to cover that as well?
Just to be absolutely clear. So Jenny, yes, Hilary has covered this to a large part, but the answer is indeed yes. By virtue of what you're looking to do, you would need to make a variation of permission application, which would be an online process. So there'd be a specific variation of permission form to add credit-related activities, and you'd be able to do that through the Connect portal that's available to firms in making their applications.
And if a firm wants to add in consumer credit activities as well as other activities, so if they want to add on mortgage advice or general insurance advice at the same time, can they do that?
Yes, they will be able to do that by completing the correct form on the Connect portal.
Okay, thank you. Just want to touch a little bit on the application process and what's it actually going to feel like, what's the firm experience going to be like. So once you've submitted your application on the Connect system, it will automatically be acknowledged by return. So you will know that the FCA has actually received that application. What then happens is it's allocated to a case officer who is going to review the application and all the other attachments and information that you may have supplied with that application. What happens next really depends on how complete and clear the application has been. If a case officer needs to clarify or ask for additional information, then they will be in contact with you. And the likely route of this is going to be by telephone or by email for further information. Richard has got a specific question about the application process, and it's one we get a lot actually, which is how long will an application take? John, would you like to take this?
Yes, it is a question we get asked quite a lot. So, I mean, the very short answer, and I will elaborate on this a little more, is that we work within our statutory deadlines. So once an application is deemed to be complete and received by us, then we need to make a determination within 6 months. I mean, clearly, the credit market is varied, and there's different levels of complexity in business models, and there's different levels of risk in the activities that firms are performing. So we aim to be proportionate in our approach to assessing applications. So in short, we would aim to make determinations on applications as quickly as possible without actually using the 6-month statutory deadline as a target or the point that we're aiming for. We would be aiming to resolve and make determinations as quickly as we possibly can. And the 6 months merely reflects a maximum period of time that we have for a completed application.
Thanks. David had asked, what happens if I don't send in all the information that you need at first? Gary, would you like to take this one?
Of course, Hilary. So, David, the answer to your question is that our case officers will have a look at the application you've submitted and will come back to you if there's further information they require. Now, clearly, it's better if you've provided all the information we need up front, and as we've said a couple of times, there is a lot of information and guidance on the websites, and indeed the application process itself provides further information and guidance to you about the information that we require. But if there are things we need to know that you haven't told us about, then our case officers will come back to you and ask you for further clarification.
It's also important to note that we do have a very established authorisation division, and although consumer credit is new to the FCA from the 1st of April, authorising firms is not, and we're very comfortable about talking firms through what information will be required when you submit your application, and also dealing with firms that occasionally miss something on the application form. I know a lot of people have been emailing in during the webinar asking when they are going to receive their application form. The application form is via Connect, which is an electronic submission. We don't receive paper application forms. So therefore, the application form or the Connect system will be already available on the website. When you are sent your reminders for the application period, it will also have the log-on details for the Connect system, but effectively you can go online now and actually have a look at it. So what we'll encourage you to do is actually think about the information that you need, and you can start to actually access the Connect system, partially complete your application, but you won't be allowed to submit until your application period has opened.
In addition to that, Hilary, firms can also access a template version of the whole form. So rather than just going on to Connect and looking at the live environment and the live application, you can download a sample blank form and familiarise yourself with that before you start to access the live system, and that may be useful to you to do that.
And the other thing, just to remember, you heard from the video that we will be sending out information packs, and that will have a checklist of all of the things that you need to get ready for the application form as well. Once we're talking about application forms, I think it'd be really helpful to talk about the content of the application form. So it's important to stress why we're asking for the information that we do. You heard in the video that there are 6 threshold conditions that we have to legally assess every application against, and that's irrespective of whether it's a new firm authorisation or a variation of permission. So the questions on the application form are designed to give us the information that we need to assess that application against those threshold conditions. I very much want to focus a little bit on the business plan, because that's where traditionally we get a lot of our questions from. So I wonder, Gary and John, whether you could talk through, specifically referring to debt adjusting and to brokerage firms, what you would expect to see on the business plan section, because I think that's worrying a lot of firms.
Sure. Yeah, we'll do. So we'll start with credit broking. And I think it's important to stress when we're talking about business plans in general that the level of detail and the amount of information we're expecting firms to provide is very much proportionate to the level of complexity of the application in terms of the activity the firm's performing and the size of the organisation. If it's a very large organisation with lots of employees, then we'd expect quite a bit more information than a sole trader or a very small entity. With regard to credit broking, which is a fairly straightforward activity, this isn't an exhaustive list, but some of the things that we'd be looking for you to tell us about is considering that the broker is the middleman, if you like, between the customer and the lender, we'd want to understand that relationship with the lender. So are you merely taking customers and referring them to a third-party lender, or are you actually standing in the shoes of the lender in completing some of the duties that were traditionally associated with lending, such as gathering information, making an assessment of the customer's affordability. So, and we'd want to understand how you do that. So, an explanation of how that's done and your relationship with the lender. We'd also be interested in how you're remunerated by the lender. So, if you receive a commission, we'd want to know about that. How many lenders do you refer business to? In addition to that, and keeping on the theme of remuneration, we'd be interested in understanding what fees the broker firm charges and on what occasions are the fees applied. And if there's any fees policy, we want you to explain that to us. Additionally, we'd be interested in how the firm attracts customers to it. So what's its marketing strategy? Are there any specific marketing campaigns that it intends to use? And maybe we'd likely to actually see sight of those the material that supports those campaigns. Another important area, and this links to the size of the firm in terms of how us requiring a fair bit of detail, is about how it trains its staff. So some broker firms may have quite an extensive number of employees, quite a large number of employees covering different areas of the country. If that is the case, we'd be very, very interested in understanding how those people are trained to be competent. Is it an in-house training strategy? Is the broker relying on materials and training courses that are provided by the lenders? Because that is often the case that we see. And once those people are trained, we'd be very interested in understanding how the firm monitors the competence of the individuals. So particularly if these people are acting remotely, we'd be interested in how they're supervised and what information and what measures the firm has in place to actually demonstrate that somebody maintains competence to continue brokering.
And I suppose there's a lot of cutover and a lot of read across into the debt space, but is there anything, Gary, in addition that is very specific to the debt adjusting or debt counselling that you want to talk about?
Yes, that's right. It's a very similar situation for debt adjusting, debt counselling. And the example that I'll give, I think, is debt management. And again, what we're looking for from the business plan is to really understand your business model, to understand what are the services you're providing, who are the consumers you're providing those services to, and how are you ensuring that any risks to those consumers are being dealt with appropriately. So the sorts of things we'd expect to see within the business model itself is a description of the consumers. Who is your target audience? Who are you trying to provide services to, and how are you going to reach them? Are you using lead generators as a way of finding new customers, or are you marketing to them directly? And again, as John said, we'd want to have a look at some of the marketing materials to make sure that they're clear and transparent and not misleading for consumers. For debt management as well, we'd be interested in the type of debt solutions that your firm is offering. So precisely, what is your advice model? How are you ensuring that the consumers who are coming to you are giving you enough information for you to make the right decision about whether your service is appropriate for them? So, for example, how are you establishing the number of debts they've got, the range of the debts they've got, their income, their expenditure, their available income, any priority debts they may have within that. What are the range of debt solution options that might be available to them, and how are you explaining to the consumer what the priorities are, what the pros and the cons are of each of those different debt solutions. We'd also want to have a look at what the outcomes are for your consumers. So if you have lots of consumers who are going on to debt management plans, how long do those debt management plans run for on average? When consumers come off those debt management plans, what's happening to them? Is it because there's been a change in circumstances, or is it because they're moving to another sort of debt solution? And again, if it's another debt solution that you yourself are providing, we'd want to have a look at the transfer rates between those. So in addition to the consumers, we'd also want to look at your staff. As John said, we'd be interested to know what the training is, what the knowledge and experience are that your staff have, and not just the frontline staff, but also those supervising the advisors and indeed the managers and quite probably the directors as well. So how much information is there within the firm about the type of activity you're trying to provide? We'd also then want to go on to think about things like what happens to consumers who are particularly vulnerable. How do you spot those within your advice-giving process? Where do you refer people on to? If you are referring people out, what sort of referral fees are you receiving from the companies you're referring on to? More broadly, what's the cost structure for your firm? What are the charges and fees you're passing on to consumers? How do you ensure that those are proportionate to the actual service that your firm is providing? We'd want to know about things like the financial incentives you provide to your staff, and particularly if you're a debt management firm offering one particular debt solution, then there are some intrinsic risks potentially in financial incentives. So there's a whole range of information that we'd be looking for, but again, to echo what John was saying, it is proportionate. So clearly for a smaller firm, then we would require less information. For a larger, more complex firm, we'll be looking for more information. It's all about us understanding the business model you're operating, making sure you give us enough information for us to be able to make an assessment as to whether you meet those threshold criteria.
And that segues very nicely into a question that Kuldip has asked. So he has asked whether it makes a difference if you're a sole trader or a limited company. So largely, Kuldip, it doesn't. There are some differences which the application form itself will guide you through. So, for example, there's a different section when it comes to approved persons, which we'll talk about a little bit later on. But largely, the application is going to be exactly the same. As Gary and John have both made the point, it is proportionate. So if you're a sole trader, it should be easier to explain on your application form exactly how you're monitoring your business and what you're actually doing than if you're a very large multinational company, for example. I suppose it's also interesting for viewers to actually know what we've learned through the authorisations that we've done since the beginning of April, and also through our supervisory experience for both the debt and the credit brokerage market. So I wonder if you'd like to comment on that.
Yeah, you want to go first, Gary?
Yeah, absolutely. So from the debt management perspective, as Hilary says, we've had a number of applications in, and also our supervising teams have been out talking to some debt management firms. So there are really four areas that have come to light through that I think are worth highlighting. The first is the question around fees and charges. And as I said, we do expect the fees and charges passed on to consumers to reflect the level of work the firm has undertaken for those particular consumers. So it's making sure that the fees are proportionate to the work that's been undertaken. The second area is around financial incentives. And again, I mentioned it earlier, but it's about making sure that if there are financial incentives being provided to staff, that doesn't interfere with the appropriateness of the advice that's been given. The advice that you're providing to your consumers, to your customers, needs to be the right advice for the consumer. The third area is around cross-selling of products, and again it's about making sure that any products you're selling to the consumer are appropriate to meet their needs. And then the fourth area is really around back book acquisition. So we know that there will be some changes within the market. We know some firms may choose to leave the market. And the important thing, I think, from this perspective is that if you're acquiring a back book, that you are very clear about your obligations to the consumers, to the customers whose debt solutions you're now taking over. So to make sure that you have systems in place to fully review the debt solutions those consumers are on, those customers are on, to make sure that they're the right ones for them, and to ensure that you have those systems in place on an ongoing basis.
Yeah, thanks, Gary. And I'm sorry to put you on the spot straight away. All I would add to that with regard to broking is the point that Gary's made around fees, and but fees obviously in the context of broking. So please be clear in your business plan on the occasions that a fee will be applied and precisely what it's for in terms of it reflective of a particular service that you're going to be providing the customer for. And if the fee is collected up front before a loan is provided, then it's very important that the firm makes it clear to the customer what's going to happen next. If there's any delay between the collection of the fee and then the loan being provided for the customer, it's absolutely clear, absolutely essential the customer understands what's going to happen and the circumstances upon which the fee would be reimbursed if that's appropriate.
That's really helpful, thank you. Several people have asked whether we're going to show this webinar again, actually. What we intend to do is publish it on our website later this week, so it will remain there for a few weeks, if not a few months. Continuing with the theme of the application process, Joanna has actually sent in a question where her company has been offered help with the application process. Her firm sells caravans and she wants to check out whether the firm is actually legitimate, so what's our advice? There is no requirement for any firm completing a new firm authorisation or a variation of permission to have third-party help, be that within a compliance officer or a legal firm or a firm of accountants. However, many firms do choose to do that. There is no requirement for a compliance consultant to be regulated by the Financial Conduct Authority, apart from which, if they're actually conducting regulated activities themselves. So the best thing I can suggest is basically check out the company on the website and maybe ask for some client testimonials or something like that.
I suppose another point to impress there, Hilary, is that if a firm chooses to use a consultant, which is entirely free to do so, but it can't abdicate the responsibility of making
Absolutely.
the application. So if you use a consultant, that's your decision, and they can be extremely helpful in helping you do that. But you must realise that you maintain responsibility for the information you provide to us.
That's a really good point, John. So effectively, when you are required to go through the application and make sure all of the information is correct, that is your responsibility, even if somebody else has completed that on your behalf. Equally, if we do ask you further questions or if we come to visit you, it's absolutely fine to have your legal representative or your compliance consultant with you, but we will expect you, the firm, to actually provide us with the responses rather than the compliance consultant. If we move on now to appointed representatives. We've had several questions in relation to appointed representatives, but first I suppose we should explain what appointed representative actually means. So an appointed representative is actually a firm that conducts its consumer credit activities under the direct supervision of another firm which is authorised by the FCA. So effectively it's almost like a parent-child relationship. A couple of important things to note here is that the principal firm, or the firm that does have the relationship with the FCA, is directly authorised, is responsible for the conduct of all of the activities of their appointed representative. So we, the FCA, do not have a direct relationship with those appointed representatives. I think that's probably the most important thing to mention there. We've got several questions about appointed representatives or appointed reps. Malcolm has questions about his brother's company, which may become an appointed representative of a principal firm. What does his brother actually need to do?
Okay, thanks,
John.
Hilary. So, Malcolm, so the first thing your brother needs to do is actually find a principal in the simplest terms. So as Hilary's already mentioned, the principals are the firms that have the direct relationship with us. They have the authorisation. So your brother would need to find a suitable firm that has FCA authorisation and is prepared to operate an appointed representative regime, and contact that firm and to establish a formal relationship between the principal and your brother as acting as the appointed representative. So it's almost, the first step is to find the firm and to then approach that firm and to see whether it is actually prepared to operate an appointed representative regime. And get and establish an agreement between you to do so. The next step for the principal would be for them to register you or your brother as an appointed representative with us as the regulator.
But they can only do that once the principal has been authorised to conduct those activities. Stephen has asked whether he wants to become a principal but hasn't received the Connect details. How can he get these? Actually, at the moment, although we talk about the first application period being from the 1st of October, there is a voluntary application period which started on the 1st of June that lasted for 3 months, will last for 3 months, for any firm that indicated when it applied for interim permission that it wanted to be a principal. You should have received details about how to apply, and you should, as I say, be able to go on to Connect and actually do that if you're in that principal pilot. If, Stephen, however, you're not, then please contact the contact centre at the FCA, and they will talk you through and refer you to the application periods team in order to basically activate your Connect account if you wanted to be a principal. We've got another question about appointed representatives from Victoria and Anthony. So Victoria and Anthony both asked questions that are around the same topic. They basically want to know if each separate appointed representative needs to apply for authorisation. Gary, do you want to talk us through that?
Of course, thank you, Hilary. So for both Victoria and Anthony, to some extent I think we've answered the question already. The FCA does not authorise the appointed representatives directly. We authorise the principal, and the principal supervises the appointed representatives. So the direct answer to the question is no, they don't need to apply for authorisation. What they need to do is to talk to their principal and to make sure that they've applied for authorisation.
We'll send you further information, including details of how to get in touch with the contact centre after the webinar. I said earlier we were going to talk about approved persons, and we've got several questions around approved persons. First of all, I think it's important that we actually explain what the term is. Again, when we're going to send out the packs later on in August, and also it'll be available on the website, there is the jargon buster. There's a lot of terminology that is completely different from the Office of Fair Trading or the OFT's regime to ours. The jargon buster will really help you understand what those terms actually mean. An approved person is basically somebody who operates one of the what we call controlled functions within your firm. So broadly, it covers things like a director, if you have non-executive directors, if you have chairman or a CEO, then effectively it will cover that. There is no customer function, so any firm that is an already existing FCA firm, they have things called customer functions, which are people who give advice to members of the public. Under the consumer credit regime, there is no customer function, so it really is the people who are governing your firm. So Simon has submitted a question in this regard, and he's from a debt management company, and he has asked whether he needs to be an approved person before applying for authorisation. Gary, would you like to comment on that?
Yes, of course. So, Simon, the answer to the question, the straight answer is no, you don't need to pre-apply to be an approved person. You make your application as part of the application for authorisation. So, as a debt management company, you'll be applying for full permission, or your company will be applying for full permission. And within that application, we'll ask whoever's completing the application to identify who the approved people are going to be, and you would be included as an approved person within that application.
We're getting a lot of questions around how many approved persons we actually every firm needs to submit. There's a lot of myths around there that you need maybe between 1 and 3 approved persons per firm. And basically, it depends on how many people are fulfilling the functions within your firm. So if your firm has 1 director, then it is likely that that 1 director needs to be an approved person. If your firm has 15, then it is likely that all 15 will need to submit an approved person application form. But as Gary's mentioned, the Connect new authorisation or the variation of permission form will prompt you to complete those application forms for those individuals.
Yeah, I think it's also worth mentioning, based on some of the applications we've seen, that our expectation for an approved person is it's someone at the appropriate level of seniority within the firm that's applying for that function. And we've seen a handful of, very small number, but a handful of applications where the applications actually come from somebody who's actually much more junior within the firm. And whilst that might be appropriate for day-to-day monitoring, our requirement is it's someone who has the overall overarching sort of control of the firm in terms of its day-to-day function.
That's a really good point, and we should also probably mention the ongoing requirement as well. So there is an ongoing requirement that if an approved person ceases to be employed by your firm or ceases to perform the function at the firm, or you bring somebody in, that you are required to notify us before that actually happens. So approved persons do need to be pre-approved before they start at the firms, and you need to submit your application accordingly. A Controllers is another question or another area that gets a little bit confusing. So again, it's probably helpful if we explain what a controller actually is. Gary, do you want to explain what a controller is?
Yes, so the basic principle or the basic idea of a controller is it's somebody who has control of the firm. So it may be somebody who is a director of the firm, or somebody who owns the shares in the firm, or it could be somebody who owns the firm directly. So we can look at the significant influence that an individual would have over the firm, or we can look at the ownership of the firm, we can look at the distribution of shares. Quite frequently we'll find that a firm is owned by another firm, so we'll then look at the different layers of the controllers within the ownership of the company, and we will require information about each of those controllers. The specific rules in relation to limited permission and full permission vary a bit in terms of the volume, the percentage of shares that somebody needs to have in order to be a controller. And once again, there's a lot of information on our website and through the application process that will give you the information you need to decide whether somebody should be a controller.
And again, it's important to stress that there is an ongoing requirement to actually notify us about your controllers. So effectively, if a controller actually goes below the threshold or a new controller is actually introduced, i.e. acquires shares in your company, there is again a requirement to notify us and to pre-notify us before that control actually takes effect. We're moving on now to some questions we've been receiving about fees, actually. So Mark has asked a question about whether fees will be annual or a one-off. John, do you want to talk about fees?
Yes, of course. So Mark, unfortunately, it's both. There is an application fee that you'll be required to pay, and that will be based on the complexity of the business that you're conducting, your regulated activity, and how much money you're earning from that, so your regulated income. The ongoing fees will be levied annually, and we consult on those annually, so they're subject to regular review. And again, they are based on the complexity of the model and how much revenue, how much income you're generating from the regulated activity. The details of the fees are available on our website. There's a specific link on the consumer credit pages to consumer credit fees, and full details of the table of fees based on complexity of model and income is shown there. So please look to that for more detail.
And Alan, Ramesh and Jasper have also asked about the fees. They want to know basically how much they have to pay and whether they pay when they submit their application. So as John has mentioned, there is information before you start to submit your application form about fees on the website, but the application forms, both the new firm authorisation and the variation of permission forms, also have a table that tells you what the fee will be, and it calculates it for you depending on the activities that you've actually selected. Yes, you do have to pay the application with the fee, so it is a legal requirement that we cannot deem it a complete application until we have actually received the fee. So when you're going through and submitting your Connect, one of the last pages you'll come to is the payment page. If you're struggling with that, then again, please contact the contact centre, details of which to follow. Michael has also asked a question about fees, and again, it's something we're really experiencing in the period since the 1st of April, which is John has mentioned the fact that the fee calculation is going to be based on a combination of your regulated activities and your consumer credit income. Gary, I wonder if you could talk us through the mistakes we've been seeing certain people making in relation to consumer credit income.
Yes, again, that's a really good question, and it is something we've seen quite a lot of errors in the applications that have come in to date. Often people think that the consumer credit income is going to be the total income of the firm, the total turnover of the firm. It's not. What we're interested in is the income specifically from the consumer credit regulated activity. So that will be income that's derived from fees or charges or interest specifically in relation to the consumer credit activity that you're performing. And if you think of some of the firms that are applying for consumer credit, they'll be doing a whole range of different activities, and it's only the consumer credit activity that we're interested in relation to their consumer credit income.
Thank you. James provides debt counselling and in conjunction with mortgage advice, and he wants to know what his fee is likely to be. Gary?
Yes, absolutely. So we've already said, again a couple of times, that the level of fee that you pay is dependent on two things: the complexity of the regulated activity that you're performing, and also your total consumer credit income. Now, in the case of debt counselling, it is deemed to be a high-risk area of activity, so it is termed a complex area for the fees calculator. That means that the range of fees that you'll pay will be between £1,000 and £15,000 for the application. The actual fee you pay depends upon the consumer credit income that I've just explained. So it will be between £1,000 and £15,000, and the actual sum will depend upon how much income you derive from your consumer credit activity.
Thank you. I also want to cover a question from Paul. Paul is from a debt management company, and he is worried that our regime will force out smaller firms. So if I can first of all say that the FCA currently regulates circa 26 to 27,000 firms, the majority of which are very small. We have a huge amount of experience, and authorisation has a huge amount of experience of dealing with very small firms, and we do operate a proportionate approach, and we've spoken about that a little bit as we've been going through. So if you're at all worried, then please, as I say, look at our website, have a look at the material that's available, and if you're still concerned, then please call the contact centre. We wanted now to turn to some hints and tips really for completing applications, and some of this is based on the experience that we've had from the 1st of April. So I want to kind of cover three main areas. The first is, if in doubt, disclose, by which I mean if you are concerned that maybe you have an event that you need to disclose around financial soundness, for example a county court judgment or a criminal conviction, and you're not really sure whether you need to disclose that, I will always advise people to disclose it. So if in doubt, please disclose anything that you feel that we ought to know about. The second thing that's we've experienced quite a lot over the last couple of months has been in relation to firms are obviously, some of which have been authorised or regulated by the OFT for a long period of time. So when we're asking for, situations about their business plan or questions around anything, they're putting in phrases like, will we do it as normal or as usual? That really doesn't mean anything to us. So when you're looking at the questions, please make sure you're actually explaining how your firm conducts its business, and include things like, how you're actually attracting your customers, what fees you're paying, etc. The final point is be responsive to us. So a lot of questions earlier about how long does it take, and the obvious answer is, well, the quicker you can respond to any of our questions, the quicker we can determine your application. We've had over 200 questions submitted since 2 o'clock, so thank you so much. We will send you information to help answer these after the webinar, because we can't possibly get through them now. We've come to the end of today's webinar. I hope you found it useful and we've helped you get ready for authorisation. Please do fill out the evaluation form at the end of the webinar. This can be opened by clicking on the survey icon at the bottom of your screen, and it should be on the right-hand side of your screen in red. If we didn't get to your particular question, as I said earlier, we will email you with details of where you can find further help. We have also put a lot of advice and information on the FCA website, and as you heard in the video, there'll be a lot of further information being mailed directly to you and then also put on the website. That will cover things like the jargon buster, the checklist, and also the decision tree to help you identify whether you are a full or a limited permission firm. I want to leave you with some key messages. 3 key messages basically. First of all, know when your application period is. You should have received a confirmation from us of when your application period is. If you haven't, please call the contact centre. Start preparing for your application now. As I've mentioned in this webinar, you can start a draft in Connect, but you can't submit until your application period window opens. But really have a look at it, look at the type of questions that are asked, etc., and start gathering your information. Also, keep your email and other information up to date on the CCI, which is the system you use to apply for your interim registration. If you don't, we are sending out reminders, re-application periods and other pieces of information, and if your email address is not up to date, you won't receive them. As I say, look out for these emails to help you get ready for authorisation. Thank you again for your time today, and we hope you found this webinar useful. Goodbye.